slow. We were live while your alert said no. Streaming charts, making gains, throwing shade. Community rip is where legends are made. Stocktwits knows they say for show. We move fast while the boomers grow. Forget your forums, forget your posts. Stocktwits wins, coast to coast. Oh, yeah! Stocktwits knows. You just caught the top.
Yeah. Woo! That was some we didn't have the boxing this time, but that's one hell of an intro song. Hey, it's the community rip. It's your boy Bags. Gautam, JFDI, Nicholas, he will be along momentarily. And welcome Paz to joining the show. It's a pleasure to meet you. Thanks for hopping on.
Likewise.
So guys, I think we got to talk about we're right starting earnings season. Banks reported last week. We've got Tesla and Google today. The market's checking off all-time highs. Where to from here? What's going on?
Well, I guess we can kick it off with Google, right? Google to me is, and Tesla also has an earning today too. And then I think the implied move for Google is 4.9%. So last time I checked. Actually, I'm gonna double check. Yeah, so the implied move for Google is 5% on the dot, and then implied move for Tesla is 6.14%. So something to just keep in mind for anyone that's kind of doing weeklies on it. I mean, ideally you want the price action to go above the implied move. But Google, 3 weeks ago, I actually made that one of my the largest position in my port, the 2x ETF for it. And so there's a couple of reasons why I like it. Outside of just the technical aspect of it, which I think it should go to all-time highs. It's like comparing apples to oranges, but one of the reasons why Tesla for a long time was running was purely because it was more in its speculative growth sector, right? So at that time, EV mass production was a new concept. No one really knew too much about it. So the market necessarily didn't have a ceiling to it. And so what Google is essentially doing now for the past couple months, this year especially, is outside of Microsoft, the largest cybersecurity company out of the Max 7s is Google. So cybersecurity, the whole sector as a whole, whether you're looking at CrowdStrike, Palo Alto, Zscaler, and so on, the entire sector has been on a pretty big rush. And then Google's also part of Quantum, and then you've also got the whole, cable isn't really a thing anymore. So you have YouTube and Netflix as really your only platforms of entertainment. And then it just makes Google, outside of just the tech aspect of it, it's at the front of essentially every single speculative growth sector. And so I think that is what the market is going to start pricing in. So from a psychological standpoint, let's say Google does go to all-time highs, right? Rather if it's on earnings reaction or let's say 2-3 weeks out from now, that's what's going to give Google the edge that some of the other Max 7s don't have, right? It's where could Google potentially go if they start integrating their Gemini into their browser, if they start including Gemini into such and such. So there's a lot of speculative growth aspect of Google, which essentially at one point Tesla really used towards that as a leverage. And so I think that's what makes Google such a good Max 7, which is why I made it my largest position like 3-4 weeks ago. And so, that is one company that I think can really catch people by surprise, especially just because, even autonomous vehicles, right? Self-driving vehicles, it's in that sector too. So it has traditional met with modern aspects of it.
So obviously, being your largest position, you're bullish. I tried to convince these guys, when was that? June 25th. I said, this is where you buy on this big one. 15% later, here we are. But GP, Nick,
well,
have you guys?
I wasn't the question. The question you gave us was like, if we had 10 grand to invest your money right now, which of the mag names would we have picked? And I think we went with Microsoft because that breakaway bar. Was it the same time period or no?
No, this was the day Google was crapping out. And I said, is this a buy here?
Yeah. Okay.
Anyway, so have you guys
big shake bar
your thesis on Google at all coming into earnings? Is this a buy the dip if there is one to earnings, or buy a rip if it pushes 5% from here is roughly $200, or are you buying 200?
I don't have a position. Oh, go ahead, GP.
No, go ahead, Nick. It's okay.
I was gonna say I don't have a position on in Google currently, but I think if it does take out all-time highs, I think you're gonna see a similar type move that we've seen in Microsoft, where it's gonna be kind of like a post EPS drift. I do kind of think it is the next mag name to go into all-time highs, so I wouldn't be surprised at the very least for price to go after that. What is the 207 gap? And I would also say, yeah, to your point, like you got a gap down to like the 200-day or the 50-day kind of pulling up. Anything mid 170s, I'd bite on it.
Yeah, so from a technical perspective, you're looking at two different setups. You're looking at a potential island formation here from the gap down in 2025, or you're looking at a head and shoulders, right?
Yeah.
We know how head and shoulders works in bull markets. Oh, look at that.
Topping pattern.
Huh?
It's a topping pattern, right?
Yes. Or a failed head and shoulders is a what? Continuation pattern.
Continuation pattern, right.
Not that any of this stuff really matters ultimately. When you're thinking about things, it's like it's earnings. It's a crapshoot. You could have some of the best growth earnings. You could do everything and it could still fail. So those are a couple different patterns if you're taking a look at it. Google is cheap, has been cheap for its existence for the most part. So that thought process to me has never been it's never been a part of my thought process, because for what they do and how much they crush on almost every metric, it's been cheap. Amazon's it's in a similar boat, right? In terms of earnings, it looks good. It looks like it's gonna break out personally, but there are negative divergences. If you're looking at Google on the weekly, RSI is continuing to make lower lows on each peak. So is the MACD. They have always been a conglomerate of what do we call them? Moonshots, right? And if one moonshot hits, they can crush it. So YouTube has been better than Netflix for a really long time. Yet Google never gets the valuation that probably it should for its YouTube piece alone. Maybe this earnings matters. July earnings in general tend to be ones, July or October, tend to be ones that go higher. So Google works. From a Tesla perspective, if you're talking about crapshoots, here's the master of crapshoots. It's such a heavy flow name. It is such a if it was trading on fundamentals, you'd probably be able to trade it better, but it trades on all sorts of things. Fundamentals is a small part of it. There are so many other things. You should be careful because Elon is back, and Elon is in a path to grow the GDP, to combat some of the financial spending. Whether that means Tesla is going to go higher this one or the next one or the one after, that's up to you. Earnings are always a crapshoot. My buys in Tesla, obviously, you guys know, are from 2014, 15 timeframe, and then the recent ones are all in the 100 to 200 range. So patience and stuff to go along with it.
All right, so let's go back to my question. Is this a buy the dip into after earnings for either of these names, or are you buying the rip on any upside movement in these names? Paz, go first.
Tesla, I would probably just watch it. I am in Rivian. I've been in Rivian since 11s, so I am a supporter of the whole EV sector. So Lucid, Rivian, and even Neo, some of your niche earnings or some of your niche EV companies, they've been looking pretty good. But as far as like the leader goes, I'd probably just waited until it either breaks out above, its downtrend is set for the last couple of weeks, or if your 913 EMA is on the weekly, starts looking good. So that for me would be more of like a confirmation bias. Because again, if you're looking at Tesla from a fundamental standpoint, it's pretty pointless because the market has never really cared about the actual earnings for Tesla. It's more so, at one point they were an EV company, so the market never really knew how to value it, and now they're pushing the whole robotics. So, if the market cares more about the robotics than it does about the EV sector, then that's where the breakout for Tesla would come with. But then that's also where things like Ribbon and Lucid could continue breaking out, just because again, the entire EV sector as a whole, there's a pretty good broad breakout across the sector. So Tesla, I'd wait out, but Google, I think Google's probably the next one that kind of closes off in Microsoft over the next couple of weeks.
Yeah, Shu in our chat said it's Chat GPT versus Google, and I don't disagree with that at all, since 56% of Google's revenue comes from search. Hey, Nick, what do you say? Buy the dip or buy the rip on either of these, or neither?
On Google, I'd buy either. On Tesla, I would probably only buy strength. If it, I feel like if Tesla gets hit post EPS, I just would have less confidence buying like the, like let's say it gaps down and it tests like that 280, 270. I wouldn't be surprised like either way to see it hold there or for it to just capitulate lower. So with Tesla, I'd prefer to buy strength versus weakness, but on Google, I'd take either. Like I'd buy because I think where Google's currently sitting, it's got a major floor underneath it where like likely if it gaps lower, it's probably going to be right in the 170s. And I just see like a massive floor right there where I don't see that as much in Tesla.
5% move down would be basically 180.
Yeah, that puts you right at the 21 EMA, I think, if that's what the green line is.
Yep. GP, same question.
Both I would buy the dip. That's me. Google's cheap on almost every metric. So if it gets cheaper, it's an ad. Unless they say they're going to stop doing search and then get the fuck out. That's a different conversation. Tesla has always been an EPS story. Fundamentals have always mattered in Tesla, which is why when EPS was turning higher in October, it ran like crazy. And why it turned, because they knew the earnings report was going to be crap in April. What was it, April? That was one of the worst earnings reports we've seen in 7 to 8 years. If their EPS picks up and they're going to have to show multiple quarters ultimately EPS growth, and if their EPS starts to pick up, which we all know is not going to be that great, so there will be some news and stuff that could potentially make it move. There is a monster ascending triangle forming here on Tesla.
Yeah, that's what I'm looking at too.
Yeah. So the bottom of the ascending triangle is a possibility on earnings. As a retest that holds, then you have a really good entry, a buy point. We talked about Tesla, I think, back in April, which was all this weakness, all this downturn, never filled the earnings gap, right? It tells you how much strength there is amongst the weakness. Crapshoot, I would do call calendars on Tesla. That's my personal opinion. Use this time frame to buy sell shorter term calls and buy longer dated calls. Let's say October to March, so to speak. Depends on your time frame, but I would say into October earnings, which I don't think it's going to be this earnings, but October earnings, sell calls, and then buy maybe March or June calls for next year, and try to reduce your costs over time.
Normally, we start this.
So you think?
with just going through a general market overview of the Qs. But I wanted to start here because I'm going to put my tinfoil hat on, my pretend tinfoil hat. I see a lot of bear talk across FinTwit these days, especially over the last 2 weeks. I think we're going to suck bears in this earnings period.
On
And
Tesla or just in general?
just in general, just general
Yeah,
speaking.
yeah.
So I'm not going
I'm
to
on
be
the same
I'm,
boat.
I'm not going to be surprised to see earnings drawdowns in some of these names to sort of go sideways and faff around a bit, and then all of a sudden take off into Q4.
Yeah, it's more post earnings price action. That's what I'm concerned about.
Yep.
I don't really care about the actual reaction for like same thing for Nvidia. I had talked about Nvidia during its earning, and to me, the actual reaction didn't matter. I could care less what Nvidia did on the actual reaction. But then it's the post ER where it ended up making all-time highs and it's been pushing. And so I think that's where ultimately and even like from a quant, gamma exposure perspective, what we've been seeing for the last couple months and even till this week um, is there's a rotation happening between your Max 7 names. And that's what you typically like to see. So when people are kind of talking about the market is at all-time highs, it's overbought, what they're kind of failing to realize is it's not every single Max 7 company that's running at the same time.
Yep.
So you'll have half that are flat or slight red, then the others will pick up. And typically when you're having price action like that, that is what keeps the market afloat. You're not looking for 3% daily candles on the SP 500. As long as you're just grinding up, that's all it takes. And so even yesterday there were multi-millions worth of Microsoft 90 days out the money calls that popped up. So now we may see cybersecurity go back into action or Microsoft kind of run again. And then Google yesterday right before earnings. Typically you don't see too many large options that come up for out the money for Max 7s especially, but Google saw 14 million for 210 for I believe a month out, which is usually pretty aggressive considering it's a very large capital, but it's also pretty closely dated right before earnings. I haven't seen too much on the Tesla end of things, but there is a good amount of gamma exposure sitting around 210, 200, not taking this week's expiration into account. So, I think it's just across the board, you're having half your Max 7 doing well, and then the other half will be flat. But then that inflow from the other half is essentially going into your random Russell names, right? So like financials, housing sector, so like Rocket or even Zillow, where everything were like interest sensitive names, they're starting to catch pretty good orders. And then even bio, so like Lilly or even Moderna, a lot of these companies that were for months doing nothing, a lot of your Russell subsectors are starting to kind of pick up steam. So that's where half of your inflow is going into, and then the other half is just keeping your Max 7s afloat. So it's a very healthy market, regardless of people kind of calling it's a frothy market. We've been in a very healthy in terms of markets finding ways to find liquidity in a very healthy manner, whether you're looking at quant or fundamentals or technicals.
Yeah, we've talked about this for years about the rotation of the Mag 7 names, or whatever acronym you want to give them, right? It just seems that only 2 or 3 need to stay hot at a time, and keep the porridge just right, so to speak. The others can just do their thing, and then money flips, right? And it just sort of rinses and repeats. GP, I'm curious what you're seeing on the option or the flow side of things.
For which one?
Anything that's popped
up. Anything? I'm more so not concerned about the flow. We've been talking about shitco summer for weeks now.
It still is.
It's like my boy HIMSS crushing it. That is having a hell of a day today. If you are in HIMSS, congratulations for the patience. Wait for all-time highs. Plus, this thing is going. But the measure move here in HIMSS, it's having. We talked about this, right? It's having its Tesla moment. Its expansion into the foray of what a high short squeeze, high growth stock is going to get. No one believes it's the meme stock of 2024, 2025. It is having its expansion moment. This is a 10x from the all-time highs from last year, the point where we said it was a gift around 24, 25. This is going to 240, 250. Whether you like it or not and how much you fight it is based on how high it goes. Give it time. It's not going to be tomorrow. It's not going to be in the weeks. Just be patient. But it's not just HIMSS. It is FSLR. It is SMCI. It is RKLB. It is Unity. It is Lemonade. It
You could
is
throw
Tempest
Upstart.
AI.
Upstart
We
is
can go through the
too.
list of
Yeah.
names. We can call them shitco summers, but reality is these things have monster bases that they're moving away from. Look at my boy Wayfair. That thing is crushing it.
Throw up the dub.
Yeah, it's going stage 2.
Yeah. This thing has a 3-year goddamn base with insane amount of volume, and it's right now just in the middle of the base. The measured moves in a lot of these names over time, if you have patience, if you're going to play more than a week, it could just get to the top. I'm not saying it can't just continue basing, right? But the basing is still another 30 points higher from here in terms of tops. But you're seeing a lot of names start to participate. Rallies are starting to broaden out. My personal thoughts on the overall markets and just in general is the S&P is going to 6,700 in this grind scenario into the end of the summer. Then we get some pretty decent pullback where everyone obviously will call for whatever things that they call for, as always. Get a little correction, maybe 10%, 5%, whatever. I think it's probably closer to that 10%. Get us right back to the 6,100, do a retest, and then we're off to the races. We talked about this, back in January 2023, 2022, late 2022. S&P is going to 7750, and there's not a goddamn thing you can do about it.
I don't know what I'm more bullish on, the rounded bottom that is Nick's beard or GP dropping 2 goddams in one show.
Yeah.
Dude, I'm tired of the crap in terms of, oh, what, we can't get there, degenerate economy, shitco summer. Dude, we're basing. Look at technicals. Take a step back and fucking pay attention, because we just got a 50% retrace of the move in April. We grabbed a bunch of liquidity. We had the second best day in the history of the Qs, and you want to talk about what was it? Bear market rally. Things are participating. Things are getting better. This administration is telling you they are going to deregulate the hell out of the markets. Give it time, give it effort, find your points. We've been talking about this for right. Not everything will participate in every cycle. Find the ones that do participate. The ones I just listed off, HIMSS, Rocket Labs, they're all. I was up over 100% on Rocket Labs. HIMSS close to 200%. Just look. We talked about Twilio. Look at what Twilio's doing. Right. We compared it to ZS, right? Very, very similar. Look at a Zscaler. It has that small liquidity move down while the markets were crashing, and then it took off, and it did 50%, 60% in a couple of months. So Twilio's in the same kind of base formation, same type of downtrend break, same type of technicals. All the moving averages are starting to get aligned on daily, weekly, monthly. Just pay attention. Like, don't get caught up in the narrative that the markets are overextended. Get caught up in the plays that are working, right? And I think that's what we should focus on in general. And you should have some hedges on always, because when we are in a straight move ascent like this, 5 to 7% corrections can come at any point.
Hey, Paz, we got a lot of people hitting that bear button over here in the chat on Stocktwits right now. Are they misguided on mashing that? We've got like 93% bearishness in the chat right now.
Holy shit, for real?
They can
I'm
keep
not kidding.
spamming. They can keep spamming that. The market's going to keep spamming green candles, so that's all I care about. Is that
Yeah.
At the end of the day, I'm here to make money. So if you're bearish, the market's going up. Hey man,
God bless you. Bless your heart.
you know, while we are on topic of shitcodes, though, as far as Unity and Upstart, because I only know the fundamental financials of those two companies, because I've been part of them for quite a while, and I have leaps on them, so they're up like I think 500% or something. But from a surface level, if you look at their financial sheets, and I'm sure other companies like HIMSS or others are probably in the same boat, but at least for Upstart and Unity, from a financial perspective, they don't look too sexy from like a, you know, if you were to just skim through it. But the biggest reason why the market is actually liking these outside of technicals is because they're turning around after years of doing nothing financially. So they may, like Unity, for example, they were for years unprofitable. They're not profitable yet, but if you look at their EPS trend, they've gone from, you know, -3s EPS range to like now it's like they're pushing -1.9 and so on and so forth. And now they're introducing things like Unity is introducing vectors, so they're trying to compete with AppLovin. So there's a whole psychological fundamental reason behind these technicals moves. So it's not just like, you know, this company doesn't make money, it's, you know, they're poor. They're genuinely shifting around. And so if you're looking at it from like a market cap valuation perspective, it's like if Unity was trading at 30s for the last 3 years while they were losing money, why would you still put the same valuation on Unity when they're actually shifting things around? So same thing was happening with Upstart, and the same thing's happening with Rivian, right? So there's a whole, like, they're genuinely turning things around. So it's not just, you know, they're just running for the sake of running. There's, the market is finding a reason to kind of move them. So technically they look great, but then they have actual genuine, you know, theses behind their moves, which is what makes this shitcodes so great, right? So if you kind of have some high beta names, they look great, right? And so a lot of these companies, these stocks from a weekly and monthly time frame, they're starting to trade above some of their, you know, EMAs that they haven't really ever traded above in years. So, you know, there's a whole fundamental foundation under them.
How long ago was that we, because I can't remember how long ago, but we were talking about some of the names that look extended, and Ben, you asked about putting capital to work, and I remember GPI and I mentioned like all the names that were still within stage one. Like, did you want to, it was like, I can't remember how you phrased the question. Like, do you want to stay in the names that were extended or like start looking for new things? And that's kind of, I think to that point was a lot of these names that are still stage one, like, you know, GP mentioned, like, or even like, you know, Unity, like they were still going stage one while everything else was running. And the stage one breakouts is where, yeah, exactly what we're starting to see on the names that were not previously moving. Do you remember that conversation?
Yeah.
How long ago? Well, I'm losing track of time. How long ago was that?
It's probably 6 weeks ago or so.
6 weeks. Okay. Yeah.
And I think I phrased the question along was do you gamble on something that is a shitco? This was leading into shitco summer. I think this was the
Oh yeah.
Actually started our whole shitco summer conversation. Was, do you keep your money in things that are just going to continue grinding higher, right? Whether it's your Nvidias or your Teslas, well, Tesla kind of, Microsoft, you know, the Mag 7, because I'm a big proponent of the big names, the mega caps, or do you look around? And I was like, I don't know. I kind of like being in my mega caps, and you were on the side of, well, we need more shitcos.
I mean, I love shitcos. I love the momentum.
Hey, Nick,
I think it's
a little off base? Back to my tinfoil hat theory. am I a little off base that we might see some give backs here during earnings season, especially as mega cap tech reports? And I kind of fall in the, I think any dip during earnings is a buy right now. I could be wrong, but right now that's where I'm at.
No, I mean, I think we're probably going to see a bit of volatility as some of these names come out. What it looks like, I would agree. I think the dips are going to be buyable, and I would steer clear of if you are in one of these momentum shitco names that is not making money, I would be wildly out before they report. Because I imagine they're still going to get obliterated if they're not performing. But as far as the names that are solid, yeah, I think the dips are viable. I guess I'm gonna have to kind of play it by ear and just see where.
I don't like playing in earnings anymore. I don't like playing in earnings anymore anyway. That's a long time ago for me trying to time that, and it's basically a crapshoot. I stand by my 60-30-10 rule, right? 60% down, 30% up, 10% meh. That's just how earnings kind of goes. And for me, it's not something that I'm playing going into, but I love to buy a dip, in after hours or the morning after earnings have been reported. I think that's some of my best buys that I've ever pulled off in my life happen in those times. So that's what I'm watching for. Maybe that's what I'm hopeful for because of my past history.
I mean, it's a made tell to me if you see names that are market movers or even those that are kind of like the thematic names get hit post EPS and bought up right away. And you start seeing that like kind of like a history of that, 2-3 names, and it kind of keeps going. I mean, that only bodes well. So I don't know. Like I said, for me personally, it's just kind of, I got to see how it kind of plays out and how they play out. If you're sized right, I mean, sized right and bought right, I would argue that all the dips are going to be buyable.
All right. Before we move on, just quick show of hands. Who's bullish short term to intermediate term? That's within the next month to 4 months.
I think Max Payne, like if you're looking at it from like a psychological perspective, the Max Payne is a continued like grind melt higher in the indices. How that looks on the individual names, like they could very well, let's say just hypothetically say they gap and run all of these mag names. They are gonna, I mean, it kind of goes back to like GP, discussing the idea of lockout. Like that would probably nail in the coffin. That's kind of how I'm thinking about it.
I don't think that happens, right, Nick? And
sure.
If you're looking at the price action over the last, let's say since the summer started, it's been rotational, right? So I don't think even in my portfolio of stocks, I don't think every stock has been green even one day together, right? Like, so even today I'm enjoying obviously the HIMSS move, Rocket Labs, all that stuff. And then you have Unity, a thorn in my side, right? It's down for absolutely no reason. But it's what it is, right? And you can see that in the rotation structure that's happening is that they're just grinding and rotating through names. So let's say Google and Tesla do have a good response. Then you'll probably see money come out of Microsoft and you're already seeing money come out of Netflix, right? So money coming out of Netflix going into Google makes sense, right? They're in the same kind of space. They've traded together for many, many years until I think 2020, 2021, when things got a little weird with the pandemic, but they used to trade always together, Google and Netflix and Meta, right? When the like we talked about this, is there's a finite pool of money in these names and they rotate in between. So let's say Google has a bad earnings and it responds. I wouldn't be surprised if Apple runs, right? Like it's kind of how things go. You don't know where they're gonna rotate to, but you can kind of get a pattern in terms of what they're rotating out of and what stories or narratives that they're gonna run for a while.
Speaking of
Google,
Apple, I'm in a position today at 213.
yeah, I'm still in my position at 20 from 201. It keeps getting into that 214.67 level and getting slapped in the face. Not a lot of volume while it gets slapped. So you can see Google's run a lot into earnings, which is always not a great sign in general. So can always see it pull back. And Apple, we've talked about this, man. Earnings are crapshoot. You think you have it figured out, especially when we were younger doing this stuff. You think you have it figured out. You know exactly what's going to happen because all the moving average, and it takes a big fat dump or it goes the other way. So you hope for.
I think you see Apple gap the 200-day. I think that's going to be a surprise.
It should. I've been waiting for that gap for a couple of weeks now, but it keeps getting to that area and getting rejected.
Hey, Paz,
technically, it actually looks pretty
good. Apple is. I know people talk about the innovation aspect of it, but dude, Apple has such a. It has a chokehold on the like. Everything kind of runs on Apple. Like they're the way, like the workflow that's set up for Apple, I think is just so hard to kind of break. So I'm not personally in Apple. Again, I think it would still need to kind of turn the 210, 214 range into a support from like a weekly perspective, right? But I think it would do well. It's just, if there's one company you want to kind of call a monopoly, right? I think Apple is that one company. It's like almost everything is like their infrastructure is just super strong and it's hard to compete against. So, from that perspective, I think Apple's just hard to break.
The analysts like to call it sticky, right? Everything that they have is sticky. Once you get in the ecosystem, you're kind of trapped.
It's hard to break through it. Yeah. So it's like even my PC setup, right? I could have probably looked into other companies, but it was like, Apple just works perfectly with my stuff, so might as well just get the Mac Mini M4. So it's hard to break through. Their ecosystem is what keeps Apple afloat, realistically, and they don't really care too much on the innovation aspect of it, just because I think their customer base is super loyal, and so I think they understand that. So as long as they have that going for them, I think they're great. But I think the weekly looks semi decent, but it's not something I would necessarily buy here unless I have like fundamental conviction to it. But I just kind of watch it until I get some confirmation. But I don't.
So my question that I gave the three of you a moment ago was, short to intermediate term, who's bullish? We all raised our hands. That goes into my next question of, we're currently in quarter three. Quarter two is being reported, for the next few weeks. How do we prepare for the fourth quarter of this year? And usually you get to see some fireworks, whether it's a Santa Claus rally. I can't believe it's July and we're talking about Santa Claus already. But I think this is something that you kind of got to plan out, right, Nick?
Sorry, I was distracted by the chat room.
Yeah. So, yeah, you do have to plan out. I'll take it from Nick. It's all good. That chat room is wild sometimes, so I get it.
Don't listen to me. Just pay attention to yourself.
I think you do have to have a game plan. I think I just talked about the game plan. I think we pull into like 6,700 or so on the SPY. You get a 10% correction, grab some liquidity for the move higher. The thing about markets is in up years, it tends to close up and tends to push up. And in down years, it tends to push down. We saw it in 2022. As we haven't had many down years, so just a friendly reminder, 2022 closed, even though we had the double bottom in October, we closed near the lows in December, right?
Yep.
And so you'll unless there's something fundamentally happens, you should see we can't continue this grind forever. The grind needs liquidity to move higher, and no one is going to come in and buy this market in well, maybe in the small caps, but in the indices to move much higher without some liquidity, right? And so the liquidity grabs, the liquidity moves down are necessary to move higher. So I think it's very similar to COVID, right? We just continued to grind from. I think we started off the liquidity grab in June, right? We had that quick, I think 7 or 10% move in 2 days or something like that, and everyone thought double top. Do you remember that during COVID?
Yep.
And then we took off at the end of June and didn't close up shop until SoftBank went on its monster options buying spree at the end of August, right? So similar kind of path here. It could be we started a bit earlier, so we could be running into earnings seasons, but I think we continue to grind out into the end of summer.
Yeah, there's been 2027 leaps for the last like 2 months, like monster options that were being loaded up for the last couple months, even like till like 2 weeks.
They closed out a lot of those, by the way.
Yeah,
a lot of those were closed out.
I've seen more open up for the financial sector now, so I think they're just trying to kind of rotate their money in and out. So yeah, there's been a good amount of just overall and just in general, you're going to see a lot of this rotation amongst the Max 7 names. There's not necessarily anyone opening fresh puts. It's just more so taking profits or just opening up fresh calls. That's like a leap, a year or two out. So at least from my end, I haven't seen anything where someone's loading up a big, put order on 90 days out or something like that. So, and then again, there's really no exposure down below either if you're looking at from like a gamma delta perspective. It's a healthy market. Like that's the point. It's, as long as you're just holding throughout any volatility, you're gonna be fine. So you're not really in a day trade type market where you have to take advantage of volatility. I think if you just stick with conviction on a couple of names you like, have a good diversification across various different sectors to have a good risk to reward tolerance, I think you're going to be fine. And it's been fine for the last couple of months. So less is more type of market where it's healthy.
I agree with that, except with the exception of the interesting thing that I've noticed in terms of like the intraday volatility is the lows continually get bought.
Yeah.
So I think there is opportunity there on the day trade side, but I also agree with you. Like, sit through it, do what you got to do to like hold your positions and hold your winners, because in my opinion, seeing how I'm seeing the lows get bought is very indicative of like dips being bought. Like lows are getting bought.
Yeah, and if you're looking
gamma, so you're pretty much every dip's gonna just get bought at this point, which is good. That's healthy.
Sure.
GP, you were about to say something.
Just technicals are working, right? Pull up the NQs for me, Ben.
You got it.
All right. I think when technicals stop working, and you'll know, it'll be easy to see. When technicals stop working, you need to start paying attention more. Go to the hourly time frame.
Whoa.
All right. You don't have the 200-day, but
I can put it on there.
Yeah. Right. It's working. Right. It has been working. If you take this from the hourly to the 4 hour, it's the 50 SMA, multiple time frame alignment. It continues to work. Keep paying attention to these intraday time frames. They continue to work, and when they stop working, you'll know. It'll be really clear to see, and something's changed. So this is what I pay attention to, and you can use this as a way to start seeing weakness. And what we also know here is the more times we test this intraday time frames, the less times it will continue to provide support, right? So it's getting there, right? So I think we can we can push up and out of this for now, but it's testing zones that you gotta be cautious short term, because if these break, then they can accelerate. And as you can see, the 200-day on the SMA is about 800 points lower, so you can get quick flushes here and there. So
I mean, I think behaviorally that's just something to.
Go ahead.
Yeah, I say, like, behaviorally, I think that's just something to pay attention to. You know, like if price is respecting a certain moving average, whether it's the 10 or the 20-day, you're going to see most of the momentum and like short-term swing guys, like push out of a name if you see those moving averages get broken. And on top of that, if we're seeing just a massive amount of like up opens and weak closes, that's something to pay attention to. If we're continually seeing just seeing names get faded into the close, which we're seeing the opposite of that right now, kind of like just those are kind of the things that I'm paying attention to.
You are seeing names faded into the close, right? Like in terms of days that are bad for certain names. I'm not saying all names.
Sure.
And they tend to close near the lows. The problem there's been no follow through, right? You have this, we talked about this, right? Like Tempest AI had the 19% move back down move, no follow through.
Yeah.
FSLR, big 20 something percent move, no follow through. HIMSS, 35% single day move and still no follow through to the downside. So that's been what I have noticed is that when you do have these down moves, shorts step in via puts or whatever, and they continue to push down all day long into the close, and then it's like magically they can't do anything the next day. It's been fun to see, interesting to see.
So we talked around my question, but I don't think anybody really answered my question unless it was just stick with what
we're too busy in the chat, Ben.
Yeah,
we're too busy in the chat.
How do we prepare for Q4? Right, we've already started Q3. Is there even a Q4? Does anybody give a shit? Like, are you just sticking with what's working? Is there a name that you like that you're not in that's on your watch list? I can go a 1,000 different ways with this question, but what do you do to prepare for the end of the year?
Oh, long names, short futures.
What do you mean by that?
Long individual names?
Yeah, like I'm long the names that we've talked about consistently, and I will be using futures to mitigate risk.
So that's your head.
Yeah. It's
Paz, what about you?
There's no reason not to be.
Do you just keep with what's working? Do you look to rotate out of some things?
I would. So at least what I've been doing with my community is since like pretty much the April lows, just open up leaps, or rather you do comments, you just let those keep doing its thing. So if you have a good cost average, you're essentially just taking profits along the way, but then you hold a position, right? Because again, if the whole thesis is we melt up into the end of the year, and then I also had in my report around fall, that's where you might see a little bit of actual frothy price action. That could be a good time where if you're looking into changing up your portfolio a little bit around, you could do it around fall, but you're probably going to end up rallying towards the end of the year. So if your cost average is great, you just let it do its thing. But if you're someone that's trying to get in, you can just look to open up swings, not short-term calls, and then just kind of just average your way in. As far as short-term stuff goes, I think Russell right now is really hot. So I like to kind of diversify by having like a good rotation of monthlies, while I have swings going on for multi-months. So, a lot of the financial bios look good. I don't know if you guys trade China or if you guys put China in the shitco territory or not.
I mean, there are shitco names in China for sure. I'm active in BABA. GP, I think, still has a BABA position. I wouldn't exactly consider BABA a shitco, even though sometimes China makes you feel that way.
Yeah, because I don't know if you guys know this, but the strongest rallies that China has had, so like HSI or HK, have also been years where U.S. equities also had their strongest years. And China currently, HK or HSI, they're on pace at making a decade-long move. And so if China ends up rallying, that is going to fuel into the U.S. equities, which seems the opposite of what the media makes you believe. But if you look at the numbers and statistics and historical data, a strong China year directly correlates to the U.S. equities having one of the strongest years. And so the way China's looking right now and on the weekly, monthly time frame, that probably is going to take you all the way into Q4, end of the year. And if China has a strong year, that's going to directly correlate to U.S. equities also pushing through. So, if you're looking at FXI right now, it's on the verge of breaking out from a multi-year trend, but then it goes all the way back to like a decade long. If you look up HSI or HK, there's a direct correlation between the two, and I think the media kind of makes it seem like both markets hate each other, when in actuality, the strongest U.S. equity surges have come when China has also rallied. So that's something that you could throw into your thesis of why a melt up for U.S. equities will continue. As long as China remains strong, there's a direct correlation between both of the markets. So
Sure.
GP
I love doing the opposite of what the TV tells me to do.
GP just told the chat to buy Neo. I'm just going on what happened just in the chat. I don't know if he's serious or not. I don't know if you want to clarify that, or you're just going to leave it there, GP.
I'm going to leave it right there.
All right, I'm looking at the chart. I'm going to leave it right there too. Nick, how do you prepare for Q4?
If you're following the COVID playbook and I kind of you'd be a little bit more cautious going into September, late August, September. Which is, I don't know. I keep looking at the COVID year as kind of my guide, loose guide. So I'd be lightening up or just continuing to ride and let the trail stops force me out. But I think ultimately I'd be looking to reload or leg into those positions if trail stops did get hit once they start to base out. So like I'd be looking for a lot of mainly scanning for like the relative strength and to see what holds up the best if we do kind of sell off come August, September, October-ish. Because if the way that played out, if it played out that way, you'd see that sell off. Everybody would be rooting for the Santa Claus rally between Thanksgiving and Christmas, which would probably kind of bring price back up to highs. Another kind of maybe sell off in that range, and then that would basically set up a high level base for a leg higher, coming out of that. But I mean, for me personally, I trail stop everything, so it makes it easy on me for the most part.
Do you guys remember?
Nick,
I'm looking back.
Just quick question, Ben. I have a technical question for Nick before you continue.
Yeah.
What's the measured move of a double top breakout?
The width of that range. So if you measure the low of if it's a true double top, the V in the center is not going to come all the way down to kind of that floor, because you're wanting to see that center pivot kind of get undercut. That's what fuels the rally or fuels that rip higher. And it also kind of depends on what the chart looks like prior. So if you have a strong leg, price moves sideways, you could measure out like an ABCD leg higher. But on the conservative side, I would be looking at just the width of the double top and extend that up. We've kind of talked about measured moves, and I kind of, you hear a lot of people get I get away from price target or measured moves. But I think having a loose idea of a measured move or a price target allows you to be a little bit more flexible with the approach. If you think let's just, pull up the NQ, for instance. If you think that, if you're just looking at or was it the ES maybe? If you're looking at that as an inverse head and shoulders, right? Go back to the ES where you had those price targets on there.
I didn't have anything on the ES. It was the SPY and the Qs.
Oh, either one. Whatever one you had the price targets on. If you have a loose belief that price is going to I don't know, let's just say 685 to 750. It's going to keep your bias on the right side of the trend. Whether price gaps, if you get gap downs, if you get a rough couple days, you're going to be looking at like the moving averages to kind of hold. But it's going to keep you on the right side of the trend versus like not having those price targets or those measured moves kind of laid out. Yeah, you could kind of just argue that, hey, I'm just a trend trader. I'm going to just continue to ride the dominant trend. But I don't know. I feel like having kind of a loose target is beneficial in my opinion. But anyways, sorry, GP. Back to your double top breakout question. It's the width of that range, at least on the conservative side.
I think the initial move is 8 to 10%, and the measured move is the range as you were saying.
Sure.
So if the SPY is breaking out on an 8 to 10% move, it gets you to that 66, 67. There's a lot of confluences.
Yeah,
that level.
I didn't want to cut you off, but I was going to say that earlier. I was like, I can't remember whatever price target I said, dude, if you just flip the range upside down, it puts you right at that number that you're talking about.
Yep.
All right, guys, we only got a couple minutes left. Hey, Pat,
Sure.
I don't know if you're looking in the chat, but somebody wants to know about all kinds of positions. Yeah, I'm guessing either you're trading them or you've mentioned them in the past. Pick one or two if you want to, and then we'll go into our last words.
We can go over Upstart. I think that's a short-term and mid-term. I think it has good potential. So, yeah, you can just stick on the monthly, or even the monthly. The monthly is good too. Weekly or monthly, both are solid. If you look at the monthly, this is a historical move, right? As long as they can kind of close here, this is really the first time you're essentially opening and closing above your 50 EMA. So from a technical perspective, it's great. And then now it fits the whole interest rate cut narrative, right? The whole point is the market, the more you delay rate cuts, the market actually likes that. And that's just kind of how it's been. Like and same thing goes for Robinhood. Like everyone talks about the S&P inclusion for Robinhood. The more that gets delayed, the more Robinhood is also going to keep running. So something like Upstart, it's very close to making a 52-week high, so that the market can keep pricing that in. So ultimately, you'll probably see 90s, and then comes your short squeeze because there's a whole short squeeze thesis behind Upstart. For Robinhood, I've been part of this one since 17s. It's just business-wise very cheap, right? Like there was a point where the trailing PE was dropping while the share price was rising. It was very cheap, and then crypto as a whole is surging, so it's great. But the whole SP inclusion being delayed is a really good sign for a hood, especially when you have something like XYZ, which got included just last week. So there are financial companies that are hitting inclusions. So the market can tie that into hood and be like, well, there's a very strong chance at some point Robinhood will get included. So think of it as like you buy the rumor and then you sell the news. So as long as hood continues to surge here and you're just riding your EMAs, your next target, just bring that up to like 140, right? And then I also saw some pretty significant out the money calls that were opening up for a hood last week that were targeting around the 140 range as well. So there's a good amount of inflow that's piling into hood, and then you could use VBull as a sympathy to it, or even Coinbase. But these are tickers that look great, and they're cheap still. So even though Robinhood's at all-time highs, fundamentally it's cheap. So let that run. Same thing goes for Rocket, right? Like Rocket companies. It's in the whole interest rate cut sector, and if you put their ER risk aside, because they do have an ER coming up, if ER goes well or whatever, weekly looks great. And the whole idea is you're front running when the next rate cut will occur. So these weekly monthlies are fresh breakouts. So that means there's a lot of room for them to run, right? They're not overbought just because they're up like 30-40%. To them, 30-40% is equivalent to like the SP 500 moving 3%. Like it's very normal, right? Like every behavior for every ticker is different. So Rocket could probably just end up going to 25s again very easily, and then something like Upstart can trigger a short squeeze if it turns 95s into a floor. So there's a lot of companies that genuinely look great. So whether if it's Reddit, Rocket, UPST, Robinhood, there's a lot of tickers right now that are very retail friendly, which genuinely are just now starting to break out. So they're not overbought. They look great.
All right, Nick, last word.
I don't know. Gilead is probably my favorite setup right now, and
Whoa,
Moderna.
the Widowmaker's back.
I mean,
No.
if it ain't no shitco summer if drugs aren't involved.
GP, last word.
Drink beer, eat sugar, hedge the markets, stay long.
I just want to say to Paz, thanks for hopping on with us. We appreciate
thank
the
you,
time.
guys.
It's nice to get to meet you and just listen to some of what you're sharing every day on Stocktwits and elsewhere. But I want to give a happy birthday shout out to both Nick and GP. It's birthday week, or it was birthday week. So love you, my guys. Appreciate you. But with that, that's it for our show this week. Just tune in next week, the Community Rip live right here on Stocktwits, 2 p.m. and we'll see you then.